So in this video, we're going to talk about how you can increase the winning probability of your supply and demand trading setups using the confluence of Fibonacci zones, and we're going to see how you can combine those to get a very powerful trading strategy. So make sure to watch the video till the end. Hey guys, welcome back. So in this video, we're going to talk about how you can combine the Fibonacci zones plus supply and demand zones in order to make a very powerful trading strategy. Okay, so if we talk about supply and demand zones, these are the zones that you can find on the charts, and there are different types of supply and demand zones. Okay, we have covered all of them in detail in our previous videos. So the supply and demand zones have a moderate winning probability. Okay, and if we talk about the Fibonacci zone, they are also zone between the level of 50 to 61.8 Fibonacci. Okay, so in between those ratios, that zone is called the golden ratio zone, and that zone also has a very moderate winning probability. So now separately, these two zones have winning probability that is moderate, but if we combine these two zones, we can increase the winning probability of the final setup that will form. Okay, so if we want to make a statement in this video, that would be the number of confluences is proportional to your winning probability. Now there is one thing that you should keep in mind, that you should not add like more than 3 confluences to your trading strategy, because if you are keep on adding confluences, the chances of your strategy winning will increase. But in the end, if you, let's say, have added 5 to 6 confluences, then you are hardly going to find any trading setups that meet all the requirements or all the confluences that you have added. So make sure not to overdo it, because that can also decrease your trading opportunities. So here, if we go into detail of here, you can see that there's a supply demand zone forming here. So this demand zone has a moderate winning probability. Okay, but if we combine it with Fibonacci, because here in this one we are trading this zone alone, there are possibilities that price may come down to pick the pending orders and then move in the bullish direction, but it can also break this zone and that zone would not be valid anymore. But here in this case, we are combining the demand zone with the Fibonacci zone. Okay, so if I take the Fibonacci tool and draw the Fibonacci ratio from here to here, we can see that this demand zone is forming between the Fibonacci zone. Okay, so here the Fibonacci zone is 0.5 to 0.618 level. So this demand zone is on the same level of the Fibonacci zone, which means now the winning probability of this trading setup is much higher than if we were trading the demand zone alone. Okay, and we're going to talk about and we're going to see this in the example as well. Hey guys, I'm cutting this video to announce that we also have a supply and demand indicator which you can use in order to detect the supply and demand zones automatically on your charts. We have this indicator available on TradingView. Here you can see the demo in this video as well. So make sure to check the links in the description. Here you can see that if I just zoom in a little bit, I can see the formation of a demand zone that is a rally base rally demand zone. So let me just draw the zone for you. So here, this is a rally base rally demand zone. Now if the high of this base zone will be the high of our zone, and the low of this base zone will be the low of our demand zone. Okay, so there are 2 candles inside this rally base rally demand zone. Now here we can extend it in the future to see how it's performing. And now, as I was saying, we're going to combine 2 trading setups. The first one is this demand zone, and the second one is going to be the Fibonacci zone. So if I take the Fibonacci tool and draw from this wave, from this swing low to swing high, we can see that the Fibonacci zone is also forming at the same area where the demand zone is forming. So what that means is now we have combined 2 trading setups, or we have added a confluence of a demand zone to our supply and demand. Okay, And here in this case, the demand zone is forming at the same level at which the golden zone is for the Fibonacci ratios. So now the winning probability of this setup is much higher than if we were trading any of these two alone. And in the future, we can see that the price bounced from this zone multiple times. As you can see here, this is the first time that where it touched the zone, then it bounced till this level, then again it touched the zone here, and then it gave a bullish move. And if we extend it a little bit further in the future as well, we can see that the price bounced from this zone 1, 2, 3, 4 times, okay, which is a very good trading setup. So this is how you can combine the Fibonacci zones and the supply or demand zones in your trading setups. Here, as I was saying, you should also be looking for any other like confluence that you can add, but always keep that in mind that you should not increase the number of confluences to anywhere above 3, because that would decrease the probability of you finding trading setups. So in this case as well, there's a third confluence as well, which is this swing high, which is acting as key level. Okay, so if I just draw a horizontal line here, we can see that this is also a key level. So with these 3 confluences, this price level is very important, and it has proved it in the future that the price is bouncing from this key level multiple times, as we can see here. So this is how you can increase the probability of your supply or demand zones. Okay, so let me just revise what we have discussed in this video so far. Okay, first of all, we talked about what is supply zone and demand zones and what are Fibonacci zones. Okay, the Fibonacci zones are the zones that are between 50 to 61.8 Fibonacci ratio, and that zone is called golden zone. Now if we are trading the supply zone and demand zone alone, there is a moderate winning probability, and if we are trading the Fibonacci zone alone, there's also a moderate winning probability. But if we combine these two, then we can increase the winning probability of our trading setup. Okay, and after that we went through how it looks like the trading psychology of why it behaves differently when we are trading them alone and when we are trading them in combination. Okay, so after that we went through an example and saw on the charts that how it performs, how when we combine the Fibonacci ratios and the demand zone and also a third key level, that is this swing high, then how it performed, because the price bounced from this level multiple times in the future. So this is how you can increase the probability of your trading setups. So I hope you like this video. If you have any questions, please comment down below and I would love to answer them. Also make sure to check the links in the description and make sure to subscribe. See you guys in the next video. Thank you.